Will foreign investors sell India? Will Putin's visit to India and the camaraderie that Putin and Modi exhibited be the catalyst for this sell-off? Let's dive deeper in this episode of The Big Picture. One of the major news flows of this week has been Russian President Vladimir Putin's visit to India, where India's Prime Minister Narendra Modi welcomed him at the tarmac and they drove together to their next meetings. There have been a series of meetings where collaborations across various topics have been discussed, and seems like it's turning out well from whatever reports we have been reading. But at the same time, the Western commentators have been very critical of this meeting, considering the issue between Vladimir Putin's Russia and Ukraine, and India's neutral stand in these matters. Continuing with the bonhomie displayed between the two leaders at the Tianjin SCO summit early this year, they seem to have taken their relationship to a next level, much to the chagrin of the West. What does it mean for investors? What does it mean for capital flows? In one of our earlier episodes, we made a mention that foreign capital follows geopolitical cues. Over the last 6-7 months, we are noticing and we do think that India's utility value in the geopolitical game has dropped. And that is very clear with the display of friendship between US and Pakistan. So, how does geopolitical cues define capital flows? Let's go back 2-3 years in history and see what happened with China. As the relationship of China with the US soared, what we saw was a process called re-benchmarking. So what really happened was India, China, Russia, Brazil, most of these countries are grouped as emerging markets. And there are equity indices which track the performance of these emerging markets, which also plays the role of a benchmark for a global investment firm to allocate money. So there is something called as MSCI Emerging Market Index. What we noticed a few years ago was that a new index called MSCI Emerging Market ex-China was created. So, and these asset owners, which are large endowments, pension funds, and asset managers in the US, started allocating to emerging markets based on this new index. While in the past, when US saw China as a partner, they used an index which included China, and when the relationship kind of soared, they started moving into this new index, excluding China. And make no mistake, India was actually a biggest beneficiary as the second largest member of this emerging market index, and now is the largest member of the emerging market ex-China index. What it means is, when ETFs invest in emerging markets, India gets the maximum flow. Now, if India's utility value in the global geopolitical power game reduces, would foreign investors move away? Would foreign investors be nudged to move away from India? Is a question that one needs to ask. Over the last few years, we have seen that emerging Indian equities have done phenomenally well compared to most of the emerging markets, except the last 1 year. We have also seen that India is trading at a significant premium to its own history and at a premium to emerging market peers. Will it continue if foreign investors start selling India? Over the last few years, the domestic Indian investors, the retail investors, have taken the burden of financing India's growth expectations, growth aspirations, which is a fantastic development. But at the same time, foreign investors have been investing into India either through private equity or through supporting IPOs or just investing in secondaries. Now, is that going to change? At one point where Indian investors keep investing in SIPs, whereas foreign investors start withdrawing. While we do not know with certainty, this is a scenario that one should not ignore. Again, we reiterate, foreign capital follows geopolitical cues. If the West wants their investors to stay away from India, they are going to stay away. We'll meet you at another episode of Big Picture soon.
Investment in securities market is subject to market risks. Read all the related documents carefully before investing.